Warren Buffett's secrets to long-term stock market success. Warren Buffett, often referred to as the Oracle of Omaha, is one of the most successful and renowned investors in the history of the stock market. With a net worth measured in the tens of billions, Buffett's investment strategies have made him an iconic figure in the world of finance. What sets Warren Buffett apart from other investors is his remarkable ability to consistently generate substantial returns over the long term. Value investing, the bedrock of Buffett's strategy. Warren Buffett's investment philosophy is firmly rooted in the principles of value investing. This approach entails identifying undervalued stocks, companies whose intrinsic value exceeds their market price. Rather than following market trends or chasing speculative investments, Buffett seeks out companies with strong fundamentals, durable competitive advantages, and the potential for long-term growth. Value investing rests on the concept of the margin of safety, which is the difference between a stock's intrinsic value and its market price. By focusing on stocks with a significant margin of safety, Buffett aims to minimize risk and maximize potential returns. This approach has served as the foundation of his investment strategy for decades. Patience and long-term perspective. One of the cornerstones of Buffett's investment success is his unwavering patience and long-term perspective. He is known for his famous quote, "Our favorite holding period is forever." Unlike many investors who buy and sell stocks rapidly, Buffett takes a patient approach, holding onto investments for years or even decades. This long-term perspective enables Buffett to weather market fluctuations and take advantage of the power of compounding. Over time, the returns on his investments accumulate, leading to substantial wealth creation. Buffett believes that the longer you hold quality investments, the more likely you are to realize their full potential. In-depth research and due diligence. Warren Buffett is a voracious reader and researcher. He spends a significant amount of time studying financial reports, annual reports, and industry trends. His meticulous due diligence allows him to make informed investment decisions. Buffett and his team at Berkshire Hathaway, his conglomerate holding company, assess companies from a variety of angles, including their competitive position, management quality, and growth prospects. Buffett's commitment to research and analysis is a testament to his dedication to understanding the businesses he invests in. He famously quipped that he doesn't invest in businesses he can't understand, emphasizing the importance of clarity in his investment choices. Economic moats, seeking sustainable competitive advantages. One of Buffett's key criteria for selecting stocks is the presence of an economic moat, a sustainable competitive advantage that protects a company from competition. Companies with economic moats have unique qualities that make it challenging for others to replicate their success. Buffett identifies various types of economic moats, such as brand strength, network effects, cost advantages, and regulatory barriers. He believes that companies with strong economic moats are more likely to withstand market volatility and generate consistent returns. Buy low, sell never. While some investors are fixated on buying low and selling high, Warren Buffett has a different perspective. He aims to buy low and never sell. Buffett's belief in the long-term prospects of the companies he invests in leads him to hold onto his investments, even during market downturns. This approach is reflected in his portfolio, which includes stocks he has held for decades. Buffett's commitment to holding quality investments through thick and thin aligns with his belief in the enduring value of businesses with strong fundamentals. Diversification, a few, but well-chosen holdings. Buffett's portfolio is known for its concentrated positions in a relatively small number of stocks. While diversification is a common strategy among investors, Buffett's approach is different. He believes in focusing on a few well-selected holdings rather than spreading investments too thinly. By concentrating his investments in a select number of companies, Buffett can closely monitor their performance and make informed decisions. This strategy aligns with his circle of competence principle, which advises investors to focus on areas they understand deeply. Avoiding market noise and speculation. Warren Buffett is known for his aversion to market noise, including the constant stream of news, market predictions, and speculation. He emphasizes the importance of blocking out the noise and maintaining a disciplined approach to investing. Buffett's disciplined investing style, coupled with his ability to stay focused on long-term goals, shields him from the short-term distractions that often lead to hasty investment decisions. This ability to remain calm and steadfast in the face of market turbulence is a crucial factor in his long-term success. Adaptation and evolution. Warren Buffett is not a rigid investor. He adapts his strategies to changing market conditions and evolves with the times. While his core principles remain consistent, he is not afraid to adjust his portfolio and investment approach based on shifts in the economic landscape. In recent years, Buffett has displayed an openness to technology investments, even though he was historically known for his aversion to tech stocks. This adaptability highlights his willingness to learn and evolve, a trait that has contributed to his enduring success. A focus on intrinsic value, not stock price. Buffett's investment approach revolves around assessing a company's intrinsic value rather than fixating on its stock price. He seeks to determine what a company is truly worth based on its fundamentals and growth prospects. This approach allows him to identify undervalued stocks and seize opportunities when market prices deviate from intrinsic value. By concentrating on intrinsic value, Buffett maintains a rational and grounded perspective on the market, regardless of its short-term fluctuations. His ability to distinguish between stock price and intrinsic value is a key element of his investment success. Staying humble and learning continuously. Despite his unparalleled success, Warren Buffett remains remarkably humble and open to learning. He is known for admitting mistakes and using them as opportunities for growth. He values continuous learning and seeks to improve his knowledge and investment strategies. Buffett's humility is a powerful lesson for all investors. It underscores the importance of acknowledging that no one is infallible, and learning from both successes and failures is a vital aspect of long-term success in the stock market. A legacy of giving back. Warren Buffett is not only an astute investor, but also a philanthropist. He has pledged a substantial portion of his wealth to charitable foundations, primarily the Bill and Melinda Gates Foundation. His commitment to giving back and making a positive impact on society is an integral part of his legacy. Buffett's approach to philanthropy underscores the importance of social responsibility and giving back to the community. This ethos extends beyond the world of investing and reflects his dedication to making the world a better place. The timeless wisdom of Warren Buffett. Warren Buffett's enduring success in the stock market is a testament to the timeless wisdom of his investment principles. His focus on value investing, patience, due diligence, economic moats, and intrinsic value remains as relevant today as it was when he started his investment journey. Buffett's ability to adapt, learn, and remain grounded in the face of market volatility provides valuable lessons for investors seeking long-term success. While the secrets to Warren Buffett's long-term stock market success are clear, implementing them requires discipline, dedication, and a deep understanding of the principles that underpin his approach. Investors who strive to emulate Buffett's wisdom must be prepared to commit to a long-term perspective, conduct rigorous research, and exercise the patience required to weather market storms. In doing so, they may find themselves on a path to enduring stock market success, guided by the sage wisdom of the Oracle of Omaha. So guys, let me know your thoughts in the comments section below. For more interesting content, give this video a thumbs up, and don't forget to subscribe to the channel for more awesome content. Have a nice day, and I will see you in the next video.